Hello, thanks for joining us. I'm Jason, and I'm joined by our Chief Investment Officer, Jason Eliason. Now that the quarter's ended, we thought it'd be beneficial to recap what's transpired. Overall, it was a really good quarter, so everything's great. Right, Jason?
Well, certainly it was a really good quarter for the equity markets. They were up anywhere just under 10%, which is terrific. But no, everything is not great. Fortunately, many of the things that we were concerned about, such as the U.S. trying to trade spat, Brexit, fiscal and monetary policies globally, they didn't really result in poor investment performance. It does not mean that we should not be concerned about these things, though. In fact, they continue to weigh on us and they really factor into our outlook. 2019, though, it was a really good year from an investment return standpoint. There was broad-based market strength. Every asset class exceeded our expectations in terms of rates of return. From a U.S. equity return standpoint, U.S. stocks were up anywhere from 25 to 30%, while foreign stocks were up 22%. But even more surprising was the U.S. bond market. Aggregate bonds were up 8.5% last year.
On the surface, everything seems really great. In conversations the investment team has been having, though, the discussion centered around what can go wrong instead of what can go right. Is that a fair statement?
Yeah, I think that's a very fair statement to make, Jason. Things have been great, and we do not expect any kind of immediate reversal from these good fortunes. But it's really in our nature and part of our process, in fact, to really understand what could go wrong, the pitfalls, before trying to move on to what the potential gains are. Again, though, we cannot control what markets do. It's impossible to time them. You've heard us say that many times. Instead, we focus on what we can control, which is our exposure to the markets. We feel our cautious tone is very, very much warranted. We do not know when the next downturn will occur, so we feel it's very prudent to make sure that our portfolios are properly allocated, so one does not need to sell assets at unfavorable prices. Instead, when markets turn negative, we should be net buyers of those assets. It's interesting. We closed out the last quarter, 2019, which capped a decade. That was the most impressive decade for investment markets. It's been incredible. No one is certain what will transpire this next decade, but we feel pretty confident that markets will be higher. There may be a little bit of a dip in there in between now and then, but we feel very confident they'll be higher in 10 years than they are now.
Thank you, Jason.
Well, certainly.
And thank you for joining us. I hope you found the information helpful. Jason Eliason also wrote a full report if you'd like more information, which can be found on our website at waller.com/blog.